What's going on, guys? In this lesson recording, I want to break down how I made over $1,000 only risking 175 bucks. So I recorded one of my live trades, but before we get into that, I just want to break down the simple economics of this trade. So in this recording, I take the 684 calls for a scalp. I bought 25 contracts and I filled at $1.17 per contract. So for this trade, I was using about a $3,000 position size, which is pretty small for me. What's more important than my position size, which I want to stress to you guys, and I cannot stress this enough, is where you place your stop loss. So just because you're entering a trade with $5,000 or $10,000, it doesn't mean the full $10,000 is what you're risking. What you're risking is where you're putting your stop loss. So in this trade example, I entered at $1.17 per contract and my stop loss was at $1.10 per contract. So if you multiply 25 contracts by 7 cents of risk, my real risk, not just my risk, my real risk on this trade was 175 bucks on $3,000. So my exit on this position came at $1.60 per contract. So if you multiply 43 cents on 25 contracts, you'll end up with 1,075 bucks profit. So I'm risking 7 cents to make 43 cents. That's a 6.15 risk to reward ratio. And the screenshot's attached, and let me show you guys exactly how I did it. So we're going to break down the recording. I'm going to narrate exactly why I got into the trade, what I was looking for, yada, yada, yada. So let's see. What I was watching for on this position is I was looking for a momentum scalp from these contracts. I was looking for these contracts to trade up into this 162 level. And what I was really looking for is I was looking for a quick failure and a pullback. We had left these equal highs in this session, but I wanted to take a quick scalp down and just collect some lows. Basically a liquidity sweep into this low at 684.23. Ultimately, I wanted these 5-minute equal lows at 683.26, but we didn't end up getting them. And what I was targeting as well is these quick equal lows at 684.95. So let's let the video play out. Entries about to come in soon. 25 contracts loaded up, 684 calls. Let's make it work. So about to push the button, about to enter this position. Let's see here. Entry comes in here. This is Thinkorswim. You can see 25 contracts just got filled here. My order comes in here. This is not a paper trade. You can see 8 contracts, 1 contracts, 10 contracts. You'll see it all on the tape here. 8, 1, 10, 5. That's all me. That's all your boy. No paper trading, fugazi bullshit. So enter the position, and immediately what do? I enter at $1.17. This yellow box is my fill. That's my entry price. Stop loss is this red rectangle, 25 contracts at $1.10. So $3,000 position size, risking 7 cents per contract. 7 times 25 is 175 of real risk. So let's watch it here. I'm waiting for these equal lows to get swept. That's my first target. And let's watch the recording. So being patient in this trade, I want a quick momentum trade. I don't want price to play around too much. You can see we quickly pop through these equal lows, and immediately this trade is up 10 cents per contract, right? If you want to scalp for 10 cents, be my guest, but I'm not looking to scalp for that. I want to catch the full move. So waiting here. Contracts are gaining a lot of premium. This is a quick move. Still leaving my stop loss at $1.10. So my risk is still 175 bucks. I'm pulling up TradingView here to show you guys. Now let's watch here. What I want to show you guys is proper management of a winning trade, not getting scared of it. Let it go and profit. Entry was 117, contracts are already 130. I just moved my stop loss here to $1.14 to this volume imbalance on the contracts right here. So now my entry is $1.17. Stop loss is $1.14. I'm only risking 3 cents on this position. It's basically a free trade. 25 times 3, I'm only risking 75 bucks at this point. Let's let it play out. Trade is still in my favor. All I was watching for is if we had inversed this bullish gap that's holding us up right now, we're going to take out this swing low. Premiums are increasing in value. Volume is coming into these premiums too. You can see it on the tape here. This is a times and sales. You're going to see everybody's order come in on the times and sales. So we're a minute and a half into this trade and we're already up 20 cents per contract. Perfect entry. Stop loss is basically break even. This is how you want to trade. You don't want to sit in a trade too long. You want to time your entries as perfect as possible and move your stop loss to break even as fast as possible as well. Psychologically, if you can be in a trade for 1 minute and it's already a free trade, break even, no risk involved, your emotions are completely off of the table. Psychologically, it is a free trade and a free opportunity for you to make money. So let's watch it here. Price action is looking good. I'm ignoring these little pops that we have. We just had a strong 1 minute candle closure, down close candle. Waiting here. What I want you guys to pay attention to is I want you guys to start watching the volume on the contracts. When I was eyeing these contracts, there was really not a lot of volume. The time that I got in, immediately we see 2,500 other contracts being traded and added to the volume. So now, during this trade, I upped my stop loss to $1.18. Now it is completely a free trade. There's no risk involved. The only thing that I'm risking here is my commissions and fees to enter and exit the trade. Now let's watch here. I want you guys to pay attention to the premiums as well. The premiums left equal highs at $1.39, and they're going to start holding a lot of value and holding their premium at around the $1.30 mark. This gives me the confidence to hold my position, not get scared of it. One more impulse move down to this swing low and watch these premiums fly to my target. That's what I was watching for. I'm not getting scared. If it takes me out during this time of the trade, I'm not going to get upset. It's a free trade. Still watching here. Premiums are holding value at $1.30. New 1 minute candle is open, and I want to point this out to you guys and focus your attention here. On the 1 minute chart, we have triple equal lows right here at this 684.53 level. This is going to be very important in the next 2 minutes. Just watch. And I think I'm going to set my alert to that level as well. Yep. Here comes the alert, 684.55 equal lows. So I'm not scared of a little 10-cent pop. This shouldn't scare you out of your position, these 1 minute pops. Premiums are still holding $1.30 per contract. We're still up on this position, 17 cents per contract from our entry. Now let's watch it here. Pay attention to this too. 11:05 on the clock. The new 5 minute candle just opened. We should be seeing an impulsive move down to this swing low pretty soon here. Now let's watch. Equal lows just got swept. Watch the premiums fly here, guys. Watch the tape and watch the volume. And what I want you guys to pay attention to is I just moved my stop loss up one more time to the low of this 2 minute candle and to the high of this 2 minute candle. This is the last impulsive move down, and this is the first impulsive move up on the premiums. Entry was at 117. Stop loss is now $1.24. So I can walk out of this trade with guaranteed profit, which is a winning position for me. Now I'm just watching the SPY chart. I want to see this swing low get taken out before we had rallied up here. Let's see. Again, these pops are not scaring me. I'm noticing the premiums are holding $1.30, $1.35. Make sure to watch the premiums. And what I want to focus your guys' attention to, and I'm going to mark it in the video as well, I had put an alert for this $1.62 level on these premiums. This is the last swing high before the premiums dove basically in half. So they went from 160 all the way down to 95 cents. They lost 45% in value. I'm targeting premiums to trade up above this high and ultimately to this 207, but we didn't go that high on this particular trade. And I'll mark that in the video as well. Should be getting this impulsive move down. Now I'm moving my stop loss up to $1.29. Still a free trade. Watch the volume here, the volume stick, and watch the tape. Tape is speeding up. I'm just showing you guys this is my target for the premiums. This is all done beforehand. We're about to take out this swing low on SPY. Up the stop loss. When we break this low, I'm going to up the stop loss one more time. Let's see here. Premiums are now $1.50 from $1.17. We're about to break this swing low as well, so I'm raising the premiums. I'm raising the stop loss slowly and slowly and slowly. We should be getting that 162 level on these premiums as well. Watch the tape and watch the volume. Consistent volume in these premiums now. Everybody's chasing this move. And we're already in it. Again, we take out my target. This is how I avoid being greedy. We take out my first target on the premiums. I have to up my stop loss. A lot of people, they get greedy because they see the trade is moving in their favor and they think it's just going to go 200, 300%. Secure your own bag first before you get greedy. So what I'm doing is we had just taken out my target at 162. My stop loss is now 151. And let's see what we can do. Premiums are still moving in my favor. SPY is continuing to fall. We're going way above my target. Now, this is again how I avoid being greedy. My target was 162. I'm upping my stop loss to 159. This is higher than I intended for this trade, which I'm happy with, but I want to avoid being greedy and giving back basically hard-earned gains. On a 5-minute trade, making $1,000, I'm more than happy with. You can easily compound that to make $2 to $3 grand a day. So now let's see the tail end of this trade. And you're going to see why I move my stop loss up as well. We're getting a little bit of a pop here. A lot of people in this situation would try to move down their stop loss. I just let it hit. I'm happy to just capture a small portion of these profits fully out of this trade at $1.58 per contract, $1.59 per contract. So here's the recording that I took on my phone. You can see here the premiums flew above 162. At the highest point of this trade, this was a $1,400 trade. I ended up walking out of it with $1,100, around $1,100. So there's the recording. There's my live trade, and this is how I risked only $175 to make $1,075 for a 6-to-1 risk to reward ratio trade, trading the 684 calls. So thank you guys for watching. More recordings to come. I hope you learned a thing or two. And keep your trading sharp and methodical. Don't be careless and gambling. So I hope you guys learned something. I'll see you guys on the next one.